remaining, let's turn to renewable energy and REITs, both of which has been gaining more and more investor attention, and our next company sits right at the intersection of both. With markets mostly sideways in recent years, many investors have turned to dividend-yielding stocks for more reliable returns. Our next company is a standout in that space. Not only has it consistently delivered high dividends, but it has also provided strong capital gains with a 19% year-to-date performance. With interest rates easing and ESG investing continuing to gain traction, can COL Energy REIT, the country's largest renewable energy REIT, deliver more than just steady income? And to walk us through CREIT's story, we have Mr. Oliver Tan, the President and CEO of listed company COL Energy REIT Corporation, the first renewable energy REIT in the Philippines, and its parent company, end-to-end renewable energy developer, COL Renewable Energy Corporation. With a background in finance, business transformation, and growth strategies, Mr. Tan's leadership paved the way for COL to become one of the leading renewable energy players in the Philippines. With a diversified portfolio in solar, wind, and run-of-river hydro, Mr. Tan also holds key positions in the COL Megawide Group. Let's all give a warm welcome to Mr. Oliver Tan.
All right. Thank you, sir, for supporting us today. Okay, so obviously, just to share, no, for our clients, and I'm sure for other maybe institutional investors as well, one of the one of the strong like issues now or trends now would be dividend investing. Diba? A lot of people like dividends, and so REITs have been in focus, right? But C-REIT compared to maybe the other REITs, let's say your assets are not as visible to maybe the retail investors, because for others it's like the malls, the offices, they could see it, but for C-REIT it's not exactly the same. So my first question is, can you just give a brief overview of who C-REIT is, and basically what's your portfolio, what's your asset like?
Yeah. Before that, good morning everyone to your audiences. C-REIT actually, the business model of C-REIT is quite simple and straightforward. We own the largest renewable asset portfolio in the Philippines, approximately around 7 million square meters of gross leasable area. Let me emphasize on renewable energy asset portfolio. When we did C-REIT, we practically created a new asset class. Before, as you correctly pointed out, we are also familiar with residential, office, commercial, industrial. With the REIT, we created a new asset class. So basically, our assets covers 14 different provinces. We lease out to solar power operator. They are our tenants. Our unique differentiation compared to the other REITs is we enjoy 100% occupancy rate from day one. Let me explain that. Compared to malls or offices where they have multiple tenants come and go, in our case, from day one, our operator tenants has to occupy the whole leasable space. And we also enjoy one of the longest weighted average lease expiration, approximately 20 years. So in terms of lease occupancy volatility, we have the most stable.
Can I ask, like, you said a long weighted average lease expiry. So are the rental rates already predetermined from day one? Or is it like a 5-year and then they renegotiate the rate? Pero 20 years yan.
So we structure our lease agreements with two components. First is what we call the guaranteed base lease. This is a 20 years lease term. Guaranteed base lease basically give us the fixed monthly rate regardless of the performance of our tenants. And we also have the variable lease, which are computed at the end of the year. These are essentially any incremental revenue that our tenants enjoy. Incremental revenue are a function of two factors: higher solar irradiance, which therefore produce higher power generation, and the higher renewal tariff rate because it's backed up also by long-term power supply agreement. In terms of percentage, guaranteed base, this would approximately be around 98% of our total lease revenue. 2% would be variable. We specifically designed it that way to provide stability in the recurring lease revenue.
If I may ask, sir, for the base, the guaranteed base rate, no, is there an escalation there that's priced in the contract? Or?
Yes, there are escalation pricing in the contract. It's being escalated every year or every 2 years.
But like just to give us an idea, no, roughly like blended basis, like how many percent a year is the escalation? I mean,
On a blended basis, that would be around 2%.
per year.
Yes.
Yeah. Okay. So at least even so, meaning even without let's say new assets being injected, we could expect at least a baseline level of year-on-year growth in revenues.
Yes, yes. And since you mentioned that keyword, I understand that for the past 2 years, our earnings has been relatively boring, flat, but we are already preparing the asset infusion. Most likely, this will happen Q1 of next year. We will be acquiring in batches as our sponsor company, Energize. It's a solar plant. We are targeting total of 1 gigawatt worth of solar plant capacity to be infused into CREIT by next year. Batch 1 probably will be around 200 to 250 megawatt, and then it will be followed every quarter. So that will create revenue growth and obviously dividend growth at the end of the day.
Yeah. So just to help our audience, no. So you mentioned 1 gigawatt additional capacity next year, no. But how does that compare to the current? Like how big is it compared to the current capacity? Total of CREIT?
Yeah. Current actually we measure in terms of square meters because currently CREIT has only 1 solar plant assets in it. The rest are mostly property. Land.
Land.
Yeah, but for the asset to be acquired next year, this will be solar plants. That's why we're measuring it in gigawatt. So moving forward, we will be measuring in terms of square meter, leasable area, and megawatt for the solar plant capacity.
I see. And that 1 gigawatt, how does it compare to the 700,000? I guess in terms of yield, like what kind of dividends? Like, will it double the market cap of CREIT or, I mean, what's the expectation there? Because hindi nga siya apples to apples eh.
Yeah. So I think the 2 years ago we acquired raw land, right? So we acquired 4 different raw land. The lease rate here are pretty straightforward, like leasing an industrial land, right? Once we acquire this solar asset, we will be able to capture almost 90% of the power generation EBITDA. And that is very significant in terms of probably 2x or 3x compared to the current raw land lease that CREIT is enjoying.
So significant increase
Yes.
in size, no? Okay, sige. And yeah, before Charles, sorry. May tanong ako ng tanong. Kasi, di ba may, I mean, the property companies, for example, there's the 3-year seasoning period. Are you covered by that? Kasi, if the plant energizes next year, how can you inject it right away?
Yeah, that's a very good question. Actually, we secure SEC waiver or exemption for this one. Reason being, once our solar plant are certified by third party, this include the lenders, technical advisors, that it achieves successful testing and commissioning, and our equipments are backed up by long-term warranty period. And solar plant is a mature technology. Therefore, we requested for a waiver of the 3-year track record, which SEC granted previously, and we believe for the subsequent round of infusion, SEC will look at it favorably.
So from day one, you can inject na?
Yes. And I think one of the reason behind the 3-year track record is obviously, if you build a mall or office, it will take 3 years to ramp up your occupancy rate. Whereas in our case, day one, there's already a full 100% occupancy.
And I believe nga, sir, di ba, correct me if I'm wrong, even like some of your current tenants, they're still constructing the plant, no? But they're already paying the base lease. Is that correct?
Yes, that's the 4 raw land that I mentioned.
Yes, yes,
Our tenant, even when they are constructing, they're paying, which is normal. Even if you lease a land while construction, you have to pay, right? Post completion of the plant, CREIT will acquire the solar plant asset, which will boost its recurring revenue.
Sir, you mentioned about the 1 gigawatt again for next year, no? But if we zoom out even further, what's the, I guess, could you share like CREC, maybe this is going more into CREC now, like CREC's like long-term goals, marami pa ba after the 1 gigawatt or, how is it?
That's correct. CREIT's growth will always track closely with its sponsor growth. So if you look at CREC, we have a goal of 5 gigawatt in 5 years. First gigawatt are already achieved. We're already energizing one plant after the other. In fact, last Monday, we just energized our Batangas plant. We already started construction for the second gigawatt. And with our recent, I'm not sure if I should already consider that official wins for the JF4. We've won quite a sizable long-term offtake contract there. So we have visibility. We, meaning the sponsor, has clear visibility of the 5 gigawatt in its pipeline projects. Hence, CREIT's visibility also for asset infusion growth.
Now looking further into the process of the asset injection, no? Because I noticed like in the past one, you first raised debt, right? Meaning CREIT raised debt before you bought the asset. Could you explain how it works? Because usually for other like REIT companies, it's usually for like asset for additional shares of the REIT, right? But for CREIT, it's a little different. So can you explain how it works, and will it be the same for next year, the one that you're anticipating?
Yeah. Obviously, we have flexibility in funding options for any asset acquisition. Previously, we did the bond offering to fund the raw land acquisition. That was before the entry of SM into CREIT. For the subsequent round of asset acquisition, we will most likely do the typical asset for share swap. Obviously, having SM as a big brother ensure financial muscles in terms of participating in the asset infusion, which we don't have previously. That's why we did the bond offering. Notwithstanding, we will continue to balance cost of borrowing and the dilution effect to our public shareholders in determining the right funding options.
Yeah. So to be clear, what you're saying, sir, is that you have both options.
Yes.
Diba? You could do direct asset for shares, or you could raise debt and then pay cash to the sponsor. Is that correct? For future asset injections.
Correct. Because at the end of the day, asset for share swap will mean that the sponsor has to unload those shares, right? Yeah. So this is where SM played a critical role. We have a ready buyer aside from the institutional buyers.
May I add on that? I'm just curious if SM will be considered a public shareholder, or di ba kasi by rules kailangan
10%.
Oh, di ba parang so hindi siya aabot sa 10%.
Yes, SM technical definition is not considered as a public shareholder because they own more than 10%. That's the threshold.
28%, correct? They own 28% of
Yes.
CREIT, yeah,
Yes.
as of today. Yeah.
Yes.
But if you sell the shares to them, then your public, di ba, will not increase. But you need to increase the public, right?
Yes. Well, it's a typical, I think all REITs naman face similar. Before asset infusion, if it's in the case of an asset for share, obviously the sponsor will have to sell down so that upon asset infusion, we don't violate the minimum public float.
Yes.
So currently, sir, if you can clarify, the public float for CREIT is at what percent? Right?
38%, if I'm not mistaken. Currently, public float is at 38.
So there's still a little bit of room
Yes.
to go down.
Yes.
Okay, all right. Okay. Sir, so you mentioned already, no? So you mentioned the entry of SM na to the group, to CREIT, right? But how exactly does it benefit the both either CREIT or CREC?
Well, we are very grateful to the C family. They are no strangers to our group. If you recall, they were our anchor investor, anchor IPO investor when we did the Megawide IPO back in 2011. So this is basically round two for them, and we're very grateful for their support. Having SM obviously boosts your branding. It's like a stamp of seal approval that our business model is that work. That's why they invested. And having SM also provide us access to, hopefully, access to cheaper cost of borrowing.
Okay. Yeah, of course. Now, looking at the other side of the asset infusion, no? Because typically, the increase in the dividends or the earnings doesn't, as retail shareholder, it doesn't directly translate to higher dividend per share, right? Because you're gonna be like issuing new shares. No? So could you explain this dynamic and as potential C-REIT investors, no, how can you guarantee that that their interest is always protected in an asset injection?
Well, we do follow, we have a related party board committee chaired by independent director, and the members are primarily independent directors. And we also engage reputable third-party consultant to do the asset valuation. Notwithstanding these compliances, obviously, the sponsor is very, very cognizant of the public shareholders because CREIT, at the end of the day, is an integral component to its overall plan because it provides us the wherewithal to recycle capital to achieve our 5 gigawatts. So we will ensure public interest is put at first. All asset acquisition has to be value accretive. Okay. To answer your question, it will be very difficult, obviously, to measure dividend per share. Because if you are going to do an asset infusion, the number of shares keeps growing. I think it's very important to measure in terms of dividend yield.
And in terms of dividend yield, so you're saying, in other words, when CREIT does a transaction with its parent, with its sponsor, it will always try to at least keep or increase the current yield, the dividend yield for the current shareholders. Is that correct?
It's always a function of, that's why we monitor closely interest rates. It's always, because REITs actually serve as an alternative for yield-seeking investors. So we cannot price ourselves lower than a time deposit or the other fixed income products that enjoy higher rating compared to CREIT. So we're very cognizant of that factor. It has to be a spread over alternative fixed income instrument.
All right. Okay, so in terms of the sensitivity to interest rates, no? So how would it, because right now, obviously, the narrative is lower or declining interest rates going forward. How does this affect a CREIT's operations, profitability, or let's say, even the pace of asset injection? Will it increase? What would the impact be?
Well, obviously, lower cost of borrowing provides CREIT elbow room for asset acquisition. Okay, but the pace of asset acquisition is primarily influenced by the speed of our sponsor completing the solar plant. Okay, so lower cost of borrowings will obviously redound to higher net profit, and higher net profit will mean higher dividend payout. Okay, and lower interest, as I mentioned already a while ago, can also influence capital appreciation because these yield-seeking investors on a low interest rate environment would look for alternative instrument that will give them higher dividend yield, and REITs are normally benefit from a low interest rate environment.
Okay, now looking at the risks this time, no, I understand that the contract is, there's a guaranteed base rate, but is CREIT still exposed to, risk in the energy sector?
Well, contractually, no, but from a business reality point of view, obviously, if your tenant experience poor business performance, it will somehow, it is a key risk to the company. That's why we require our tenants to procure property insurance and business interruption insurance. Solar plant, operating solar plant, the main risk there would be natural calamities such as typhoon, and Philippines is always typhoon prone. So we require them to procure property insurance in the unlikely event of a total wipeout, okay? And also 6 months worth of business interruption. Based on our analysis, it will take around 5 months to fully replace and rehabilitate the solar plant so that it can generate power. So these two insurance provide protection, okay? But I would like to highlight that all our renewable energy asset portfolio are geographically diversified. That would be the natural hedge for any calamities or typhoon.
Yeah, can I ask? Because right now, of course, it's easier because you're just leasing out the land. But starting next year, you'll be acquiring the plants. That said, will you be more, I guess, vulnerable to volatility, or if something happens to the plants, like will your earnings and dividends be affected?
No, it won't change. We're not changing the business model. Acquiring solar plant, and then CREIT will lease out the solar plant facility to the
Okay,
operator.
okay.
So it's like an equipment lease.
Fixed pa rin.
Fixed pa rin. Fixed pa rin. Only that the fixed capture the power generation EBITDA, not on a per square meter lease rate. That's why it's higher, but fixed pa rin siya.
Yeah, can I just ask, because CREC naman related, because I think this week or last week you talked about the energizing, and I just found it interesting that you talked about battery storage. So I mean, how does that figure? I mean, is this battery storage thing very important for CREC, and how does it impact the operations?
Yeah. So with the battery energy storage technology, we are able to solve the intermittency of solar power generation. Obviously, solar depends on solar irradiance, right? And number two, we're able to expand to a greater market segment. Without the battery, we can only sell electricity to daytime customer. With the battery, we are able to store and deliver electricity to serve the nighttime peak as well. And our Batangas plant, actually, we're able to supply power 24 hours. So like a base load.
So that's for CREC.
Yes.
Okay, so at least the risk that CREC will not be able to pay CREIT goes down more significantly.
But it will also, at the end of the day, it will also benefit CREIT because higher, for CREC's ability to price its electricity higher,
Yes, the
it
variable.
will translate, yes.
Will you also be buying the battery or no?
That's a good question. We have to check. I think SEC is coming up with a new IRR to expand the use of proceed of CREIT, right? But that will really depends on SEC. We highly encourage that to happen so that it can open up more non-traditional REITs. we have to check if battery falls under allowed use of
Assets.
assets.
Okay. I want to focus now on the dividends, no? Because I've noticed that the last, let's say, 2 years, you've been paying out like 106% of of income, right? So, is this sustainable? Could you explain how you could dividend out more than 100% of income?
This is more than 100% of distributable income. Please do not mistaken distributable with NPAT. Okay, distributable income is essentially net profit after tax. You deduct the PFRS revenue, which is an accounting treatment of non-cash, and then we add back the depreciation and amortization, which is a non-cash also, to arrive at our AFFO, which we peg for our dividend payout ratio. So it will always be above 100% of the distributable income because of the depreciation. You deduct it as expenses to your NPAT, but it's a non-cash, right?
So in other words, it's sustainable.
Yes.
It won't normalize to 100% in the near term, like to next year or it won't be 100. It won't go to 100%.
Yeah, let me be careful with that. In the near term, yes, but obviously we have to pay our debt. So, like if we raise bond, we have to pay our debt. So there will be time where we will have to reduce in order to allocate for debt service, principal debt service, right? Today we're able to service the coupon, but there will be time where we need to allocate to service the principal, right? But not in the near term. And by that, we will be timing it with a new asset infusion such that it will somehow offset.
So for this debt, correct me if I'm wrong, it's gonna mature 2028. Is it correct?
Yes, that's the 5-year bond, 2020. But obviously the plan is to refi.
Okay.
Yes.
Oh, okay. Yeah. I understand.
May I ask also, like, what is your allowable debt level? Because it differs, right? Not all REITs have the same allowable debt level.
Our allowable debt level is 70% of our deposited property value. That's because we are investment grade, AA plus or AA minus. Yeah.
Okay.
We have ample debt headroom. I think we can still borrow around 10 billion if I recall correctly.
Okay, sige. And then plus, if you do more asset infusion, that goes up.
Yes.
Some
yes,
more.
Yes.
I have a question, sir. So, of course, we know that your growth would be tied largely to CREIT's growth, no? But is it also possible, or is there a potential for CREIT to also acquire third-party solar assets, meaning not from CREIT, sorry?
Yes, CREIT is not prohibited from acquiring third-party asset. Should there be compelling reason to do so? By all means, yes. But the sponsor is there to provide visibility for asset growth.
So as long as there's opportunity, as long as you can raise the funds, for example, there's nothing stopping you from potentially acquiring from others.
Yes.
May I ask what is the criteria for considering, say, third-party assets?
Well, it has to be so much better than what the sponsor can provide. Sorry, it's an obvious answer.
That makes sense. That's fair. That's fair. Okay. So, of course, the question always is just to clarify, again, for our investors, no? CREIT or CREC? When should we consider CREIT? When should we consider CREC?
Buy both. I mean, if you buy both, your smile should be probably as big as this one. No, I think CREC, we're up 30-40% since our IPO. CREIT, similar if you include the regular dividend. Buy both if you can, but CREIT is really for those yield-seeking, dividend yield-seeking type of investors. But you know what's revealing? Because typically for REIT, you don't expect so much capital gain, right? I mean, logic dictates that capital gain is really not the primary consideration in buying REIT. But lo and behold, you enjoy your dividend, you enjoy capital gain, so you got best of both worlds.
Yeah, I think the timing was also very good because you came in during a higher interest rate environment. So when interest rates went down, capital also appreciated. So good timing for the IPO, I would suppose.
So buy both. I'm wearing two hats. Eh.
Sir, what about CREIT versus other REITs? Because again, there's a lot of REITs also offering, healthy dividends. No? So why should they look at or they consider CREIT, I guess, more than the others?
I think it's our unique business model. As I mentioned, our real estate, we created our own asset class. It's a renewable energy asset class in itself now. And our occupancy rate, we enjoy 100%. It's really the business model. And our tenants, the product of our tenants are basic essential. It's power, it's electricity. Though I understand consumers very strong in the Philippines, but it's a basic essential. So that's our main unique differentiation compared to other REITs. And if you factor in, so I don't think that the market is factoring in yet. CREIT's asset portfolio, because solar plant occupies a large contiguous land, okay? Today, it's in a rural area. 5 years, 10 years from now, this property will be worth so much because of its contiguity, 100 hectares. It's very ideal for township development. So maybe after 10 years, 15 years, the underlying property appreciation is worth more than the leasing business already. So there's an underlying residual value or a terminal value that can be built.
Can I ask if you own all the land? I know not all the land you own, right?
We own 95% of the land, yeah, with very small percent because the landowner doesn't want to sell. So, but we have the right of, should they decide to sell, we have the right to offer.
Right, the first refusal.
Yes.
Yeah. So that said, so are you implying, sir, that in the future you're open to actually selling the property if the use of the property will be like higher compared to maintaining it as a solar plant?
Why not? We will relocate our solar plant if our asset value is 10x or 15x, right? If it makes sense, we can easily relocate the solar plant.
Yeah, but that's like a
Far
super,
future.
yeah, far future.
Far future.
Partner naman nila si SM eh. So, there's already a buyer.
That's a very
Yeah, that's true.
that's another plus factor. Yeah, but far future. Yeah.
Sir, before we were almost out of time, but before we had any other risks, sir, that investors should look out for when investing in CREIT?
Well, obviously we are also we are in an industry, renewable energy industry, where which I don't think will happen because Philippines is a net importer. While Philippines is primarily coal, natural gas, it is a net importer. So it really makes sense to transition to renewable energy. So I think the product of our tenants will not be displaced.
Yeah. There's really a long-term push, no? I believe, like for example, in China, there's opening so many like solar plants, right? For CREIT, is it all solar currently?
All solar currently.
But going forward, like in the near future, do you expect to inject other renewable?
We
energy
are, I may be ahead of myself, we are designing a structure for wind because our sponsor has wind also. But unlike solar, it's not straightforward leasing the land because the wind only occupy a very small footprint of land. So we're coming up with a structure. We need to work with SEC and DOE and ERC and see how we can include the wind in the asset portfolio.
If it's an allowable asset,
Yes.
as you said, the battery is not right now.
Yes.
Yeah.
Yeah.
All right, yeah. So basically, sir, when I asked for risk, you said there's no risk. Because you said that long-term viability of solar is almost guaranteed, right? Given the structure of the Philippine energy demand.
Yeah, well, in any business, there's inherent risk. It's how we mitigate, hedge all these risks.
All right. April, do you have any more
I
questions?
think I'm good. Yeah.
Thank you.
Okay.
Thank you.
Sir, I'd like to ask you for your last thoughts na lang, sir. Last words for potential investors or maybe already investors today.
Yeah. So I think we've been listed 2 years or more than 2 years now, and we've already exhibited our business model, because when we started, there are many skepticism because obviously the structure is different. Will it work? So I think we're able to show the market that our products, how we structure it, works, and I think there's a far more exciting growth coming. As I mentioned, we will be acquiring significant size of assets. That's only the beginning. We're still very far from the 5 gigawatt target. So exciting days ahead.
All right. All right. Thank you very much, sir,
Thank you
for
so
your
much.
time today.
Thank
Thank
you.
you so much.
Thank you. Thank you.
Thank you again, Mr. Oliver Tan, for giving us a deeper view into CREIT. And now, before we proceed to our third segment, I'd like to once again ask our moderators for their final thoughts on CREIT. Charles, would you like to take this one?
I guess for me, what's clear, you can think of CREIT as like two parts. No? First, sustainability. So Sir Oliver mentioned all of the the characteristics like the long WALE, 100% occupancy, the guaranteed base lease, right, and also the geographical distribution of the area, no, so para diversified sila, no, and of course also the long-term viability of the solar plants. So that's on the sustainability side, but also also the growth part, right? So Sir Oliver also mentioned the anticipated asset injection next year, 1 gigawatt, and even more than that, long term, the plan for the sponsor is like 5 gig, the target, right? So there's a lot more opportunities. Of course, again, there's in the country also there's a long-term push for renewable energy. So that's a tailwind that they could enjoy for the longest time. And I guess last but not the least, the potential, no, gravy na lang to in the future, but it could be big, the potential capital appreciation of their land assets, no. So yeah, so both sustainability and growth potential seems to be there.
All right, thank you, Charles, for those key insights.